Our flagship funds, the Australian Leaders Fund and our unlisted market neutral trust, have both delivered 14% net returns since inception, which are amongst the best returning funds in their peer group. In fact, we've just got the Peacock global database of global hedge funds, and on performance metrics, we rank 20 out of 660 global market neutral funds, and on risk measures, similarly, we are in the top 3% of managers worldwide. We're a specialist long-short equity manager. Many of you are familiar with our process, having supported our funds. We employ an institutional investment process, which I helped develop at BT many years ago, with some enhanced features around our ability to short sell. And there's clear alignment between the interests of our funds and the management at Watermark, given our strong shareholding both in the listed and unlisted vehicles. Just a snapshot of our three existing funds on the left. The two listed companies, ALF and WMK, which Morgans have helped get up and running and supported over many years. ALF is a directional long-short strategy. WMK is market neutral, as the name suggests. Then we have our trust, which we launched back in 2012. We're seeing very strong flows into our unlisted fund now. There are 4 or 5 really strong long-short managers here in Australia. They have distinguished themselves globally, given the strong performance. We're not alone. And we've got very good interest from offshore allocators now, trying to work out why this handful of Australian managers have done so well with this strategy. Following the change of mandate 2 years ago, allowing us to invest internationally, we've delivered very strong performance from our international carve-out as well in our listed funds. Today, we'd like to introduce you to the Watermark Global Leaders Fund. We will be lodging a prospectus, hopefully tomorrow, and the offer will open next month. We've invested heavily in the team since we presented to you last. We've got a full coverage now across each of the GIC sectors. We've employed Simon Felton, who is a seasoned veteran from Platinum, having spent 12 years as an analyst and PM there. Just giving you a snapshot of the performance of our funds since inception. ALF has delivered a 14% net return. The market neutral trust, similarly, 14%, and our market neutral fund, which is targeting equity-like returns with less risk, 8.5%. I touched on the data that we've picked up from the global database of hedge funds. So of 660, we've since got the actual data that sits behind these numbers in this slide. Of 660 funds that register with that database, we are currently ranked 20 on performance, so in the top 3%. Our Sharpe ratio, I think, is 26. So again, in that top 3%. Now, long-short investing is a spread business. For those of you who aren't familiar with the strategy, you benefit to the extent the long portfolio outperforms the short portfolio. It doesn't matter whether the portfolios go up, whether they go down, whether one goes up, one goes down. The only thing that matters is that long portfolio does better than the short portfolio, and the gap, the spread, that's the value that we create for our investors through our stock selection. So you can see on this slide, every single year, our long portfolio has outperformed our short portfolio. We've created value for our shareholders through our stock selection. We've never lost money for our shareholders on a financial year basis. And you can see over time that alpha that's been created has averaged 20%. This is another slide giving you a sense of what's happening here. You can see the grey line is the performance of our short portfolio. So that's a cumulative return series over the 4 years since launching the trust, the market neutral trust. So today we have a $600 million short portfolio, and that portfolio has gone nowhere over 4 years, which is no easy feat when the share market has appreciated in value by 50% over that same period. So we've got some real dogs in there, which some of you may be familiar with. Hopefully you've avoided them. But it's not easy to construct a portfolio that goes nowhere in a bull market, and that's what we've done. So we're very good at short selling, and you can see the results we've achieved there. We've taken that money. When we sell those securities, obviously, we raise cash from the short proceeds. So we've taken that $600 million and we've invested it in our long portfolio, which is the dark blue line. And you can see that has appreciated in value by 150% over that same period. And the gap, that's the spread, the cumulative spread over the 4 years is 150 odd %. So, this is a very different strategy to a traditional fund. If you're a traditional fund, you construct a portfolio that tracks the benchmark. You have to be all things to all people. You have to be in all parts of the market because you're constructing a portfolio that tracks the market. This is very different. Our process is quite different insofar as we construct two portfolios, a long portfolio and a short portfolio, and we benefit to the extent that one outperforms the other. And so we think of it in terms of picking winners and losers, winners for our long portfolio, losers for our short portfolio. And it's a very different strategy. It's very much bottom up, sector by sector, using our deep industry experience to pick these winners and losers in each industry. There's very little in the way of macroeconomic overlay or top-down thematics at play in our portfolio construction. It's very much bottom up, picking winners and losers. So, if you're a traditional manager, your job is to beat the market, which is notoriously difficult. I mean, you have to be in all parts of the market. If you're running a global fund, you've got to have a Japanese team. You've got to be in emerging markets. Our process is much simpler insofar as we construct two portfolios of winners and losers and benefit to the extent one beats the other. To use a sporting analogy, a traditional fund goes up against the world champions and sometimes wins. In our funds, the manager gets to put together two opposing teams, a strong team and a weak team, and shareholders benefit to the extent the strong team wins. While the margins have varied over the years, every year our stronger team has won. The challenge going forward is to make the winning margin more consistent. But in many respects, we think of this as an easier task than trying to beat the market, trying to be in all parts of the market. We don't have to be in all parts of the market. We just specialise in sectors we understand and pick winners and losers in those sectors. And this diagram captures it quite neatly. We think that's a simpler process. It allows us to be more focused. We don't have an emerging markets team. We have a limited exposure to Japan. Because we are market neutral in each region and each sector, constructing a balance of longs and shorts in those regions, in those sectors, we don't have to be in all parts of the market because we're not being measured against a benchmark. And so that allows us to be a lot more targeted, a lot more focused in a handful of industries where we have deep industry experience. That gives us much greater control also over the outcome. Because we construct both portfolios, the portfolio of winners and the portfolio of losers, and benefit to the extent one beats the other, it's kind of like playing chess, when you're playing both sides of the board. You're always going to win, right? Well, we have won every year. Our winning team has won every year, and we've made money for our investors every single year without a drawdown. And so it allows us to deliver a more consistent outcome for our investors. And then risk. This is a hedged strategy, as the name suggests. So you don't have the market risks that are very pervasive today. All asset markets have benefited from the reflation trade, from the cheap money. Most advisors would look to asset diversification as a principal means of protecting their investors from risk. Sadly, when the tide turns and the asset values start falling, it's going to affect all asset markets. So just be wary of asset diversification as your principal means of risk management. There are very few ways of avoiding the sort of risks that are building in asset markets other than to hold cash or to hedge. And so we offer one of those few hedging strategies. So picking winners and losers within industries, you can see here the 6 GIC sectors. You can see the winners and losers in each of those sectors. So our investors benefit to the extent, Shell outperforms Exxon, ING does better than RBS, Merck does better than Sanofi, and so on. Irrespective of whether Donald Trump gets in or whether Britain has a hard exit or a soft exit, these macroeconomic considerations are not a feature in our returns. Our process is much more internal insofar as we have much greater control over the outcomes here in a fully hedged structure. Just to give you a sense of how the international portfolio has gone, We changed our mandates 2 years ago, and it's done. The international portfolio has performed very well. It's appreciated in value by 20% over a 15-month period, consistent with the performance of our domestic portfolio. So we're very pleased with the international performance. Here's a snapshot of the key long and short positions. And by all means, if anyone wants to talk through any of those investment stories, I can bore you to tears all day talking about them. That's what we do all day, every day, is pick winners and losers in these industries. So just giving you a snapshot of the new listing. So we're looking to raise $110 million with a minimum of $40 million. Now we have a cornerstone commitment that will get us most of the way there, leaving us with a modest raise, getting us to the $110 million. There'll be a bonus option attached to each a new share with an exercise price also of $1.10. It's a long-dated option, so it won't mature for 2 years, so it will be of considerable value. Important dates. So we're hoping to lodge the prospectus tomorrow. The offer opens in November, and the offer will close in early December. I'd like to thank Morgans for their ongoing support. You have been a tremendous help to us in building our business over the years. You can see from the performance numbers we haven't let you down, and we won't let you down with this new listing. So thanks again for your support.